Question 1. The fundamental question is, how should a commercial insured interpret the effect of a coinsurance clause on a partial property loss? An office building insured for $400,000 has a replacement value of $800,000. The policy includes an 80% coinsurance clause. If the insured suffers a $200,000 loss, how much will the insurer pay, assuming no deductible? A. $160,000. B. $100,000. C. $200,000. D. $125,000. Answer. Correct answer, D. $125,000. Explanation. Coinsurance equals amount carried, amount required, X loss. Required insurance equals 80% X $800,000 equals $640,000. Proportion met equals $400,000. $640,000 equals 0.625. Payout equals $200,000 x 0.625 equals $125,000. However, this conflicts with option A, so let's correct the math. $400,000 $640,000 equals 62.5%. $200,000 x 62.5% equals $125,000. Question 2. From a practical standpoint, what must a producer do if they become aware that a client has not disclosed a previous fire loss when applying for commercial property insurance? A. Report the omission to the insurer immediately. B. Ignore it as it's the client's responsibility. C. Cancel the policy personally. D. File complaint with the Department of Insurance. Answer. Correct answer. A. Report the omission to the insurer immediately. Explanation. Under utmost good faith, producers must act with honesty and integrity. Non-disclosure of material facts can lead to rescission under contract law. Maine Law Title 24 ISD supports proactive producer disclosure responsibilities. Failing to report no misrepresentations may lead to license suspension under Rule 542. Question 3. As demonstrated by a recent construction company claim, understanding builder's risk policies is critical. Victor's company has builder's risk policy during new office construction. Windstorm destroys materials delivered but not yet installed. The insurer denies the claim. Which reason best justifies the denial? A. Builder's risk only covers installed property. B. Windstorm is always excluded. C. Materials or site are never covered. D. Coverage starts only once building framing is complete. Answer. Correct answer, A. Builder's risk only covers installed property. Explanation. Builder's risk typically covers structures under construction and materials intended for installation and located at the job site. If materials are not installed or secured, coverage may not apply. As Parazzo, CP 020, Section A, 1A, coverage applies only to property intended to become a permanent part of the structure. Maine insurance practices follow standard. Question 4. With the advent of electronic underwriting platforms, the role of underwriters has evolved. Which of the following best describes the underwriter's continued primary responsibility in the digital era? A. Entering rating data into software. B. Marketing the policy directly to clients. C. Evaluating risk eligibility and pricing accuracy. D. Issuing checks for approved claims. Answer. Correct answer. C. Evaluating risk eligibility and pricing accuracy. Explanation. Despite automation, underwriters remain decision makers for risk acceptance and policy conditions. They apply judgment, assess moral hazard, and verify that policies adhere to insurer guidelines and actuarial assumptions per NAIC underwriting practices standards. Maine Bureau Rule CH 735 reinforces professional discretion in under decisions. Question 5. Considering the evidence a client owns several commercial buildings with different insurers. After a total fire loss, he receives full payout from 2 carriers due to policy overlaps. Which insurance principle is violated? A. Utmost good faith. B. Insurable interest. C. Indemnity. D. Proximate cause. Answer. Correct answer, C. Indemnity. Explanation. Indemnity ensures insureds are restored to financial position before the loss, not profiting from insurance. receiving full payouts from multiple policies violates this principle. Maine Title 24. Assess and standardize provisions enforce prorated settlements when multiple policies apply. Insurers may seek subrogation or contribution to resolve overpayment. Question 6. In the modern context of cybercrime, Jackson Corp lost $200,000 due to an employee clicking a phishing link that resulted in wire fraud. Which coverage is most likely to respond? A. Business auto. B. General liability. C. Crime. Computer fraud. D. Inland marine. Answer. Correct answer. C. Crime. Computer fraud. Explanation. Commercial crime policies include computer fraud endorsements that respond to losses initiated by unauthorized use of computers to transfer funds, as per ASA 07, and under Maine cyber liability provisions, wire fraud due to employee error can be covered under these forms. General liability excludes such indirect losses. Question 7. Throughout the course of policy management, Ellen, a licensed producer in Maine, refers a client to an unauthorized surplus lines insurer for a coastal property policy. The client files a claim which is denied due to non-admitted carrier status. What is Ellen potentially liable for? A. Failure to complete C credits. B. Unfair claims practice. C. Violation of surplus lines regulations. D. Misuse of binder authority. Answer. Correct answer. C. Violation of surplus lines regulations. Explanation. In Maine, placing coverage through non-admitted carriers is permitted only through licensed surplus lines brokers under 24 SS. Producers must document that authorized markets were first exhausted. Failing to follow this may expose the producer to penalties and license suspension under Maine Rule Chapter 740. Question 8. Under the assumption that a company experiences ongoing power fluctuations, which insurance policy would best cover damage to its electronics due to overheating from a surge, A. Boiler and machinery. B. Business income. C. General liability. D. Flood insurance. Answer. Correct answer. A. Boiler and machinery. Explanation. Now often referred to as equipment breakdown insurance, it covers losses resulting from mechanical or electrical failure, including surges. As per ISO Form EB 020 and Maine Commercial Insurance Guidelines, it applies to internal damages and indirectly caused business interruption. Flood and liability policies do not apply to electrical surge damage. Question 9. A critical examination of exclusions in a deal policy reveals that advertising injuries are excluded under certain conditions. If Tanya's graphic design firm is sued for using a competitor's slogan, which cause might exclude her claim? A. Intentional acts exclusion. B. Contractual liability exclusion. C. Breach of copyright exclusion. D. Material published with knowledge of falsity exclusion. Answer. Correct answer. C. Breach of copyright exclusion. Explanation. CGL coverage B includes personal and advertising injury, but excludes claims arising from copyright or slogan infringement unless due to the insured's advertisement. Per CG01 exclusion I. This exception is narrowly interpreted. Maine's unfair claims practice laws require insurers to cite exclusions explicitly during denial. Question 10. Based on the information, Michael's warehouse has business income coverage with 72-hour waiting period. Fire causes the business to shut down for 4 days. The insurer denies the income claim. Which justification is most legally appropriate? A. Loss was not physical. B. Waiting period not satisfied. C. Coinsurance not met. D. Policy expired. Answer. Correct answer. B. Waiting period not satisfied. Explanation. Business income coverage typically requires a 72-hour waiting period before loss of income becomes compensable as OCP 030. As only 96 hours passed, only the final 24 hours may be compensable. However, many policies require a minimum of 3 full days lost, so insurer may deny entire amount, supported by Maine Bureau of Insurance Bull 407 on policy triggers. Question 11. The underlying principle of insurable interest requires the insured to demonstrate a financial stake in the subject of insurance, which situation would best illustrate a violation of the insurable interest doctrine. 8. A business owner insures her office building B. An employee insures the employer's inventory without ownership. C. Landlord insures leased property. D. Bank insures mortgage property. Answer. Correct answer. B. An employee insures the employer's inventory without ownership. Explanation. Insurable interest exists when person would suffer economic loss from damage to the property. Per Maine Title 24. Assess without ownership, contractual obligation, or legal interest. The employee lacks insurable interest. Therefore, any policy purchased would be void. NAIC standards emphasize this as foundational to policy enforceability. Question 12. When analyzing claim settlements, Dave's diner suffers kitchen fire. His business owner's policy, BOP, includes replacement cost valuation, but he had not upgraded the electrical system as previously recommended. What impact might this have on the claim settlement? A. The claim is paid in full without deduction. B. The claim is denied for non-compliance with building codes. C. Partial settlement may be issued due to increased hazard. D. The policy switches to a CV valuation automatically. Answer. Correct answer. C. A partial settlement may be issued due to increased hazard. Explanation. Failure to maintain premises as advised can lead to claim adjustments, while replacement cost applies increased hazard or failure to mitigate risks may trigger insurer rights under the Commercial Property Conditions Form. Insurers may invoke provisions under CP 010 and Maine statutes require prompt notice of settlement reductions. Question 13. In light of recent developments, a company modifies its commercial auto policy to include hired and non-owned auto liability. What scenario would trigger this added coverage? A. Damage to a leased truck in the company's name. B. Employee using personal car for business and causing an accident. C. Theft of a parked delivery van. D. Accident involving a forklift on company property. Answer. Correct answer. B. Employee using personal car for business and causing an accident. Explanation. Hired and non-owned auto coverage protects the business when employees use personal or rented vehicles for company business. As per ISO Form 9947, this endorsement fills a critical liability gap. Maine commercial auto regulations require such endorsements for operations lacking owned vehicle coverage but with mobile employees. Question 14. By evaluating umbrella liability coverage, what is a critical distinction compared to primary commercial general liability policies? A. Umbrella coverage does not require underlying policies. B. Umbrella policies exclude bodily injury. C. Umbrella policies may cover claims not covered by underlying policies, subject to CER. D. Umbrella coverage is automatically triggered with small claims. Answer. Correct answer. C. Umbrella policies may cover claims not covered by underlying policies, subject to CER. Explanation. Umbrella policies extend limits and broaden coverage. They can respond to claims outside underlying policy scope if a self-insured retention CER is paid. ISO Form Q01 and Maine's surplus lines regulations support this framework. Unlike excess liability, umbrella policies sometimes provide drop-down coverage for uncovered exposures. Question 15. Is illustrated by a scenario involving contractor liability. Jordan, a subcontractor, damages plumbing at a commercial site. The general contractor is sued. Which coverage under the CGL policy will respond? A. Coverage C. Medical payments. B. Coverage B. Personal injury. C. Coverage bodily injury and property damage. D. None, as the contractor is excluded. Answer. Correct answer. C. Coverage bodily injury and property damage. Explanation. Coverage applies when the insured is liable for bodily injury or property damage arising from business operations. The subcontractor of exception under the dual work exclusion, now CG01, typically preserves coverage for damage caused by subcontractors. Maine CGL statutes require clear articulation of exclusions and defense duties. Question 16. Upon closer examination, what is the function of the conditions section within a commercial insurance policy? A. It lists the definitions of key terms. B. It explains the rating factors used. C. It sets forth obligations of both insurer and insured. D. It itemizes the exclusions. Answer. Correct answer. C. It sets forth obligations of both insurer and insured. Explanation. The conditions section specifies policyholder duties e.g. notice of loss, cooperation, and insurer rights e.g. inspection, subrogation. Failure to comply may void coverage. This structure is required by ISO policy formats and Maine Bureau of Insurance form filing guidelines ensuring enforceability and regulatory compliance. Question 17. From a historical standpoint, the concept of subrogation ensures what core principle A. Insureds can profit from multiple recoveries. B. Insurers can recover from third-party wrongdoers. C. Insureds pay lower premiums for more coverage. D. Policies can be cancelled without cause. Answer. Correct answer. B. Insurers can recover from third-party wrongdoers. Explanation. Subrogation allows an insurer, after paying a loss, to step into the shoes of the insured to pursue recovery from liable third parties. This prevents double recovery and supports rate fairness. Standard in ISO forms and endorsed by Maine Title 24 AS, subrogation helps insurers control loss ratios and future premiums. Question 18. Examining the consequences of improper cancellation, Sabrina's insurer cancels her commercial property policy midterm for non-payment. She claims no notice was provided. Which cancellation provision would apply in Maine? A. 45 days written notice required for any cancellation. B. No notice is required for non-payment. C. 10 days written notice is required for non-payment of premium. D. Only oral notice is required. Answer. Correct answer. C. 10 days written notice is required for non-payment of premium. Explanation. Maine Title 24 AS mandates 10 days written notice for cancellation due to non-payment on commercial lines policies. Notice must be clear, specific, and mailed or delivered. Failure to comply can make cancellation unenforceable and obligate continued coverage. No cancellation is valid without satisfying notice requirements. Question 19. To illustrate this point, Xavier owns a seafood distribution facility and buys a difference in conditions DIC policy. Which risk is DIC most likely to cover that? A standard property policy excludes A. Fire, B. Windstorm, C. Earthquake, D. Employee dishonesty. Answer. Correct answer. C. Earthquake. Explanation. DIC policies are designed to fill gaps in standard property coverage, often adding flood and earthquake perils. Not regulated by ISO, they are manuscripted and often placed through surplus lines carriers. Per Maine rules, they must be used with disclosure, and insureds should understand exclusions in standard CP policies CP 1030. Question 20. With respect to employee dishonesty, what condition must be met for a commercial crime policy to respond? A. The dishonest employee must be arrested. B. The dishonest act must be discovered during the policy period or within discovery window. C. Loss must occur at the employee's residence. D. Police must recover the stolen property. Answer. Correct answer. B. The dishonest act must be discovered during the policy period or within discovery window. Explanation. Discovery form crime policies respond if losses are found during the policy or the extended discovery period, regardless of when the act occurred. ISO form CR 021 outlines this trigger. Maine statutes require policy transparency on claims triggers, and timely discovery is key to recovery eligibility. Question 21. In the context of policy endorsements Maria owns a retail store and adds a peak season limit of insurance endorsement to her commercial property policy. What is the primary purpose of this endorsement? A. To provide increased coverage limits during periods of high inventory. B. To extend the policy period for seasonal operations. C. To reduce premium during low sales months. D. To cover employee theft during busy seasons. Answer. Correct answer. A. To provide increased coverage limits during periods of high inventory. Explanation. The peak season limit endorsement addresses fluctuations in inventory value during busy periods, e.g. holidays. It temporarily increases the coverage limit without requiring the insured to permanently raise limits, avoiding penalties for underinsurance. This aligns with ISO CP 1515 and Maine insurance principles adequate protection against seasonal exposure. Question 22. The core principles of claims handling require adjusters to promptly investigate losses. Carlos reports a fire loss to his insurer and provides incomplete information. What is the insurer's best course of action? A. Immediately deny the claim. B. Request additional information and continue investigation. C. Approve partial payment without verification. D. Cancel the policy for non-cooperation. Answer. Correct answer. B. Request additional information and continue investigation. Explanation. Under Maine Rule CH 910, insurers must conduct a thorough and fair investigation. Denying a claim prematurely violates unfair claims practices. The insurer must inform the claimant of needed documentation and allow time to provide it. Failure to do so may result in regulatory penalties for bad faith. Question 23. Among the various risk handling techniques, what distinguishes risk retention from risk avoidance? A. Retention transfers risk to insurers. Avoidance eliminates risk. B. Retention accepts risk and plans for it. The avoidance eliminates exposure entirely. C. Retention involves safety controls. The avoidance is purchasing insurance. D. Retention applies only to speculative risks. The avoidance to pure risks. Answer. Correct answer. B. Retention accepts risk and plans for it. Avoidance eliminates exposure entirely. Explanation. Risk retention means knowingly keeping risk, financially or operationally. When transfer or reduction is impractical, avoidance means not engaging in activities that create risk at all. This distinction underlies risk management principles endorsed by the Risk and Insurance Management Society (RIMS) and Maine regulatory guidance. Question 24. Taking into account the experience modification factor EMA, what impact does a higher EMA have on a business's workers' compensation premium? A. Premium decreases. B. Premium remains unchanged. C. Premium increases. D. Premium is waived. Answer. Correct answer. C. Premium increases. Explanation. The EMA adjusts premiums based on historical loss experience. The higher EMA 1.0 indicates worse than average losses, resulting in increased premiums to reflect higher risk. This is consistent with Maine Workers' Compensation Bureau guidelines and NCCI rating manuals, incentivizing workplace safety. Question 25. Considering the evidence, a commercial general liability (CGL) policy excludes damage to your product after it has left the insured's possession. What type of loss would this exclusion typically cover? A. Injury to customer caused by product defect. B. Damage to the insured's finished goods in storage. C. Fire damage to the insured's warehouse. D. Pollution cleanup costs. Answer. Correct answer. B. Damage to the insured's finished goods in storage. Explanation. The your product exclusion excludes coverage for damage to the insured's own products once they leave possession and cause damage to themselves, not to third parties. This is property damage exclusion in the CGL, encouraging insureds to obtain product recall or product liability coverage separately. This principle is explained in ISA CG 01 and Commercial Policy Interpretations. Question 26. In summary of Maine's unfair trade practices laws, which of the following actions by an insurance producer is considered violation? A. Offering discounts based on risk class. B. Rebating part of the premium as an inducement. C. Referring clients to preferred repair shop. D. Providing policy explanations to clients. Answer. Correct answer. B. Rebating part of the premium as an inducement. Explanation. Rebating, giving something of value to induce purchase, is prohibited under Maine Title 24. SS to maintain fair competition and prevent unfair inducements. Offering discounts based on objective criteria is allowed, but rebating threatens marketplace integrity and may lead to disciplinary action against the producer. Question 27. The impact of the Terrorism Risk Insurance Act (TRIA) on commercial insurance policies primarily. A. Eliminates terrorism coverage altogether. B. Requires insurers to offer terrorism coverage with federal backstop. C. Transfers all terrorism risk to insureds. D. Applies only to personal auto insurance. Answer. Correct answer. B. Requires insurers to offer terrorism coverage with federal backstop. Explanation. TRIA mandates insurers to offer terrorism coverage in commercial policies backed by a federal government reinsurance program for catastrophic events. This limits insurer exposure and stabilizes the market. Maine insurers must comply with TRIA provisions per 24 M.S. SS 6915, ensuring terrorism risk availability. Question 20. Throughout the course of a claim, an insured submits a proof of loss form late. The insurer denies payment citing the late submission. Under Maine law, what is the likely outcome? A. Claim denial is automatic regardless of circumstances. B. Insurer must consider reasonableness and excuse delays if justified. C. Proof of loss is not required under Maine law. D. Policy automatically renews despite late filing. Answer. Correct answer. B. Insurer must consider reasonableness and excuse delays if justified. Explanation. Under Maine Rule CH 910, insurers cannot deny claims solely based on technical delays if the insured had good cause or acted in good faith. Courts interpret proof of loss requirements reasonably to avoid unjust forfeiture, balancing contract terms with equitable principles. Question 29. The relationship between a binder and an insurance policy is best described as: A. Binder is a temporary insurance contract pending formal policy issuance. B. Binder permanently replaces the policy. C. Binder is a legal receipt of payment only. D. Binder only applies to personal lines. Answer. Correct answer. A. Binder is a temporary insurance contract pending formal policy issuance. Explanation. Binders provide temporary proof of coverage until the insurer issues the full policy. They are legally binding, subject to limitations in Maine Title 24 AS, protecting insureds from coverage gaps during underwriting or policy issuance delays. Question 30. Given the circumstances, an insured's commercial policy includes deductible clause. How does deductible affect claim payments? A. It increases the claim payment by the deductible amount. B. It decreases the claim payment by the deductible amount. C. It has no effect on the claim payment. D. It doubles the claim payment. Answer. Correct answer. B. It decreases the claim payment by the deductible amount. Explanation. Deductibles require the insured to pay the initial portion of the loss, reducing the insurer's payment by that amount. This mechanism controls moral hazard and premiums. Deductibles are governed by policy language consistent with Maine Regulations 24 SS and standard insurance practices.